Hello all of you, I hope you all are doing good. Today we are going to revise accounting standard 7, very simple accounting standard. But there are so many small concepts that we are going to cover today. You can see that here on screen in chapter roadmap. We'll discuss about the introduction first, then meaning of revenue, agency relationship, items not covered under accounting standard 9, revenue from sale of goods, revenue from rendering of services, two type of method, proportionate completion method, completed service contract method, income from other sources, interest, royalties and dividends, then effect of uncertainties on revenue recognition, discount. There are special cases in related to goods like delivery is delay at buyer's request, sales on approval basis, goods subject to inspection or installation, consignment sale, goods are sold to distributor or other for resale. Now, special cases related to services, membership or fee or subscription for publication, advertisement or media commission, insurance agency commission, installation fees, and last sales and repurchase arrangement disclosure then. Okay, so what accounting standard 9 talk about? This is that here when it's come to the profit and loss account that here. So it's a general accounting standard. When nowhere is mentioned how to do the recognition of revenue, then we have to come in accounting standard 9. For example, that I'm saying you that for example, accounting standard 12 talks about the government grant. So whether the government grant is going to cover it, no, that's a specific accounting standard. For example, I'm giving you AS12 is a specific accounting standard which talks about how to do the recognition of government grant when we receive them. But what is going to happen that here it's a general accounting standard. If not covered in other accounting standard, they will come here in accounting standard 9. So what is going to happen that here now, suppose this is my profit and loss account. So in my profit and loss account, I will recognize the revenue here. So this accounting standard 9 talks about how to recognize the revenue. They talk about that here, when it should be recognized and how it should be recognized in profit and loss account. So they say that here now, AS9 prescribe when and how revenue should be recognized in the statement of profit and the loss. It talks about how to recognize the revenue in P&L account. As you know that here, the name of the accounting standard is revenue recognition. So it talks about the recognize. Recognize means write it down. Revenue, where we are going to write it down the revenue in profit and loss account. So what we'll do that here now, first we have to understand what do mean by revenue that here, because we are talking about the recognition of revenue. So they say, listen carefully, they say revenue means that here, revenue is the gross inflow. Okay, revenue is the gross inflow of what? Cash. It means that may be a cash sales. Now listen carefully. So it means that here now they say revenue is a gross inflow of what? Cash. It means, for example, it's a cash sales. So I will pass entry, cash account will be debited and sales account will be credited that here. So this entry I am to pass. Then the receivable. So what entry we pass for credit sale? Now debtors account, debtors account will be debited here, account debit, and I am going to credit what? Sales account. But this is other consideration also. So we know that here cash sales and credit sale. What is this other consideration? For example, I am giving you car. I am giving you what? Car that here for the services or the goods you sold to me. So basically you are not receiving cash from me. You are not receivable also from me, but from me to you. Now what you are saying that you sold something to me, but in return I am giving suppose my car. So what entry you are going to pass? You will say car account will be debited because you are receiving car from me and you sold the goods. So sales account will be credited by you. But what common you will see that here in all these three cases that here, the common is that here, you will observe that we have credited which account? We credited to sales account that here. So they say that here revenue is a gross inflow of what? Cash, correct? Then receivable, correct? It means a credit sale or other consideration that like the car. So in all these three cases, this is revenue, sales is revenue that here, okay? Arising in the course of ordinary activity. What do you mean by ordinary activity? Which means normally related to the normal nature of business. Okay, normally related to the business activity that here. Okay, so that here revenue is the gross inflow of cash, receivable or other consideration arising in the course of ordinary activity of an enterprise from. Now three things: from where the revenue is recognized, where from the revenue basically inflow that here it is from the sale of goods. So it might be happen that we are selling goods, okay, physical component something. We are dealing, for example, that here anything we are selling this mic. So we have a shop, we are selling this mic. It's a goods because we are dealing in that here, okay. So this is not PP for someone who has the business of these mic. You got the point. So we are selling goods. Okay. Or it might be you're rendering services. Once you will become a chartered accountant, you are going to provide what? Services, that auditing service, consultancy service. Okay. And they say the use by others. Listen carefully. The use by others of enterprise resources yielding what? Interest, royalties, and dividend. It also covers it. Where they think that someone is using resources, our resources, for that we are going to get in return interest, royalties, or dividend. So this accounting standard 9 says that when you talk about the revenue that year, they say revenue is the gross inflow that year. Okay, gross inflow of what? Cash, receivable, or other consideration arising in the ordinary activity of an enterprise from sale of goods, rendering of services, and the use by others of enterprise resources yielding what? That is the interest, royalties, and what? Dividend. So what we'll do that here in this AS9, we are going to revise all these 3 points separately. What do you mean by sale of goods? How to do the recognition? What do you mean by rendering of services? And how to do the accounting of that? And we'll also discuss about the income of interest, royalty, and dividend that here. I will come to all these A, B, C 3 points we are going to discuss in detail. But what we'll do that here now, we will discuss that here now. I will come to those 3 points, but before that here, the few points that I want to discuss with you, that example of item not considered as revenue under AS9. So we'll see that here when we don't consider as the revenue that is. Now why? One by one. They say gain from sale or increase in the value of fixed asset. Obviously, when we sell property, plant, and equipment, we call them as per accounting standard 10. So when we sold goods that this is not we are selling in the ordinary course of business. For example, that here I'm using iPad here. Okay, when I'm recording this session here, I'm using iPad. That is it the nature of my business? No, I'm in the business of providing a teaching facility. So that is the nature of my business. So when I say if I sell suppose this iPad that here, so there is certain gain to me. So that is not a revenue in the ordinary course of business that here. So gain from sale or increase in the value of fixed. Increase means we increase the value of fixed asset. We will cover in next accounting standard 10 only. We call them revaluation that here. So we pass entry fixed asset account debit to revaluation reserve account. That is also not a revenue that will come to P. That is not going to come to P&L account. Now this is a gain or loss from foreign exchange. So this is going to be covered by fixed asset AS 10. Foreign exchange is going to cover by AS 11 that year. Okay. So how to recognize the gain or loss from the exchange rate fluctuation? We'll discuss in AS 11, not in under AS 9. Gain from settling a liability for less than its book value. It might be happen something I'm liable to pay that here now, but I want to settle at a lesser amount. Okay, so that is also not going to cover by AS 9 that year, because that is not normal revenue on the sale of goods that year. Okay, now instead of paying the liability 10,000, we settle at 9,000. So 10,000 is the 1,000 amount. That the less amount that we have paid is 1,000, which is discount that year. We settle at a lesser amount that year. Okay, that is also not going to cover by AS 9. Okay, then they say gain from revaluing or restating liability. It means gain from, we have done the revaluation. Basically, we will also cover these revaluation or restating of a liability in internal reconstruction chapter as well that year. So we are doing the settlement of the liability at some other value. We are doing the revaluation of that liability. Okay. So if there is some gain happen that is also not going to cover by accounting standard 9. If 9 simply talks about when you have a revenue from the ordinary course of business that is. Okay. Let's take certain example. All these examples are from the IC study material only. Okay. Now what they say is that here now, example number 1. But basically I simplify all those examples here. Okay. They say entity XY sells an old factory machine for rupees 2 lakh. What do you think? So factory machine, what is this factory machine? PP, property, plant, and equipment. Is it a revenue? No, it's a capital receipt. We don't call it a revenue receipt. Okay. So their carrying amount means book value was 1.8 lakhs. So we sold at 2 lakhs. So we made a profit of 20,000. The 20,000 gain is not revenue. It is a capital receipt recorded as a gain on sale of asset in the profit and loss account. Yes, we will record it in P&L account, but that is not going to cover by AS9. That is covered by AS10 PP. Okay. Then here example number 2. ST Limited real estate developer. They're developer. It means there is nature of business. They are real estate. They are in the business of what? Real estate. Now buys land for rupees how much? 150 crore and sell it for rupees 240 crore. So they purchase a land at rupees 150 crore and sold at 240 crore. They made a profit of 90 crore. So these land is their inventory because it is their nature of business that year. So the rupees 2 lakh is 240 crore is treated as the revenue from normal business operation. You say no, sir, they sold land. So land is PP. I agree with you that year, but it is their nature of business. So when it is their nature of business, it is a revenue received for them. Now third example that here, DL Limited Pharma Company sell its research finding for rupees 50 crore. After spending rupees 30 crore on research. Okay, so they have done certain research that year, then they sell those research They did how much expenses they have incurred on it? 30 crore. Then they sold those research finding at what price? They sold at 50 crore. So they made a profit of 20 crore. Since selling research is not in regular business, you will say, no, sir, that's a pharma company. So it is not the regular nature of, even though that's a pharma company, is it their normal, regular nature of business that year to sell the research finding? No. So this is not a revenue receipt. It will be treated as capital receipt that year. Okay. So it is not a regular business activity. Rupees 50 crore is treated as what? Other in capital receipt. It should not be treated as what? Revenue that here. Okay. It is other income they will call that here. Okay. Some of you may think so that yes, sir. If the cost was 30 crore, they sold at 50 crore, sir. So they made a profit of 20. So we are going to record 20. And don't worry that here. I will cover in yes 28. When you do some research, the expenses that we incurred at research stage, that is going to come in P&L account only. Okay. So that's why this 30 is going to come in P&L account. Then this 50 will be recorded as what? Other income. Not other income. They made income that. There is no doubt about that. But it will not be covered under AS9 because that is not their normal, regular nature of business. Okay. Now, there's some small point that I want to discuss with you. That is the agency relationship. You know about Zomato. Okay. So what happened that here now? Understand this. Suppose that here now. This is Zomato app. You open your mobile. That is Zomato app that here. Suppose. And you want to, just give me a minute. Okay. Zomato. Now you want to place an order that here. So you place an order, suppose you place an order that here. Okay. So you paid to Zomato that here. Suppose you paid to Zomato that here. Let's say that here now. Let's say 1,200. Okay. 1,200. Okay. Now Zomato, what they will do that here. You want a, you place an order of pizza from Pizza Hut. Okay. So what is going to happen that here now? So you place an order through Zomato that here. You paid to Zomato that here. Okay. Now Zomato is going to pay suppose 1,000 rupees to Pizza Hut that year. So then Pizza Hut will give these pizza to Zomato and Zomato will deliver to you. How much revenue is going to be recognized by the Zomato? We are talking from the Zomato's point of view. So how much revenue is going to be recognized by Zomato in their books of account? They are going to recognize only the commission or delivery charges, whatever they call it, that is a 200 that year. You say no sir, but he received 1,200. Correct that here. So 1,200 received by him, it's does not belong to, because they are just providing the services of delivery that year. Are they preparing the pizza for you? The answer is no, they are not preparing pizza for you. So if they're not preparing pizza for you that year, basically they are just playing the role of mediator here. Okay. So there is the agency relationship. So they are not going to recognize in their books of account these 200 that as, sorry, these 1,200 as their revenue. They will recognize this 200 only. So what will the accounting entry, just for your knowledge, I'm saying that here, the amount that they have received from is 1,200. So they will debit cash or bank account will be debited by 1,200. They're liable to pay to the Pizza Hut 1,000. So they will credit to the payable account, that is the 1,000, and they will credit this 200 to income account. It is their income. Okay. And then they will pay to the Pizza Hut, then payable account will be debited and cash account will be credited here. Okay. Anyways, in their P&L account, only these 200 will go. So what it says that here now, in agency relationship, revenue is the commission amount, okay, not the gross inflow of cash receivable or other consideration. Now, few more points that here that I want to discuss with you that here now is which is not covered by certain item, which is not covered under accounting standard 9 because it is specifically covered under some other accounting standard that here. Okay. Now, main point, I have not yet come to the main point that here about these three things, which is defined as the revenue, meaning that here what they say, sale of goods, rendering of services, and used by others of enterprise resources yielding what? Interest, royalties, and what? The dividend that here now. Okay. Now understand this. Items not covered under accounting standard 9. AS9 does not deal with the following aspect of revenue recognized to which special consideration apply that year. Okay. So where accounting standard 9 does not apply that year, they say revenue from the construction contract. Why the AS9 does not apply here? Because revenue from contractor. Just in previous accounting standard, we discussed that here. How to do the accounting of what? Construction contract. That is going to be covered by accounting standard 7 that year. Now, revenue arising from hire purchase lease agreement, it is covered by accounting standard 19. Revenue arising from the government grant, other similar subsidies, that which is covered by accounting standard 12. And revenue of insurance companies arising from the insurance contract. They have some different way of doing the recognition. So that also not covered under accounting standard 9. So under these four, the AS9 does not apply here. Okay, simple that here what we are making, because someone may argue that here we understand that here it should be from the ordinary activity, ordinary nature of business. So someone may argue that for the contractor that AS7 is for the contractor that here that I mean to say their ordinary activity is that only that construction, but specifically they have other accounting standards, so they will go in AS7. Now what are the government grant that here? The government grant will cover under accounting standard 12 like that. Okay, so specifically if there are some other accounting standards, they are going to recognize in that particular accounting standard. If there is no specific accounting standard, then they are going to come under accounting standard 9. Okay, now important points start here. Okay, now listen very carefully. Okay, 3 things I'm going to discuss with you. First, sale of goods, then services, and then interest, royalties, and dividend. So let's start with point number 5, that here, revenue from sale of what? Goods. Listen carefully that here. What it says that here now, they say revenue from sale of goods should be recognized. When should I recognize revenue from sale of goods? They say the seller of goods has transferred to the buyer the property in the goods for a price. What do you mean by transfer that here? Transferred means that here means ownership. Ownership has been transferred. Ownership has been transferred. Okay, has been transferred to the buyer for the property in the goods for a price. Price means consideration that here. Okay, for some amount that here. So when you transfer the title that here now, it will be considered as what? Sales that here. Okay, transfer of a goods. Goods we are talking about. Okay, or they say or. Okay, listen carefully. They say or. All significant risk and reward of ownership have been transferred to the buyer, and the seller retains no effective control of the goods transferred to to a degree usually associated with ownership. So what they are saying in the point of either point A or 2, what they are saying in point number 2, they say that here now all significant risk and reward has been transfer of the generally the risk and reward which is associated with the ownership that here. Okay, generally owner behave like it belongs to me like that. So they are saying generally the risk and reward which are generally associated with the ownership have been transferred to the that customer that here. So they basically want to tell you that even though on paper the title has not yet been transferred, but still the risk and reward which are generally associated with the owner that they have been transferred to the person, it will be treated as what? Sale of goods. So sale of goods, it might be happen that here we transfer the property in goods that it means the ownership has been transferred. But it might be happen that here now that the risk and reward which is generally associated with the ownership that here now that have been transferred to the customer that here. In that case also it will be treated as a sales. What does it mean that here? It means that here now on paper that person may not be owner that here, but we are going to transfer the ownership soon, but actually the risk and reward which are generally associated with the ownership that here. Okay, so we already sold the goods to them. Maybe we say don't worry, come tomorrow and take the invoice, but it will be recorded as sales today only because the risk and reward which are associated with the ownership we have already given to that person. They can enjoy that particular the goods that here. Okay, so it might be happen the ownership not yet transferred that here, but risk and reward has been transferred. In that case also it will be considered as what? Sale of goods. Okay, but this point is common. This point is common that here in all the 3 cases that here. Now what they are saying that here now, you will observe that here. Just give me a minute. What happened? Okay. Okay, this point is common in all the cases that here. Okay, just give me a minute. Okay, so what happened? Just give me a minute. Yes. Now listen carefully that here. So what it says that here now, they are saying that here now first case, you can see that here now when we are talking the sale of goods that here. Okay. So we are talking about the sale of goods. They say no significant uncertainty existing regarding the amount of consideration and its ultimate collection. It means there is no uncertainty about what? About the amount, that how much amount I am to recover, and the ultimate collection means I know how much is the amount that here and how much will be the, there is no uncertainty regarding the ultimate collection. I know we sold something that year and we are going to recover the amount, and we know how much amount we are going to recover. So these 2 points should be fulfilled, and in all the cases that here there is no uncertainty regarding how much is the amount and how we are going to recover them. Ultimate collection will happen that year. Okay, so they say for example that here now they say trial deal buys 100 airline tickets and resell them to customers. So there is a one these tourist, the agency that is, they purchase 100 tickets, they purchase, okay, airline tickets that year, and they resell them to customer. They bearing the risk. Now risk has been transferred. They are bearing the risk of what? Risk of unsold ticket. If out of 100, if any tickets not sold, then they are going to bear the loss. Since it assumes all the risk and reward has been transferred, ticket sales are treated as revenue and unsold ticket treated as what? Loss that year. So they are not playing the role of mediator. Generally, these tour operator, they are playing the role of mediator also that year, like the Make My Trip and all that. They are not talking from that point of view. They are saying they are not playing the role of mediator. They purchase 100 tickets and they say if any tickets unsold, that is, they are going to bear the loss there. If the risk and reward has been transferred to them, so that 100 ticket will be considered as sale, whoever sold those tickets to this airline, to this trip deal. Okay. So you understand the risk and reward has been transferred. So they are not playing the role of mediator here. Okay. Now we talk about the revenue from the sale of goods. So what is revenue from the sale of good that here now? That the transfer to the buyer is the ownership has been transferred, risk and reward has been transferred. Okay. And there is no uncertainty regarding the amount of concession and the ultimate collection. Now I'm coming to the second point that here. That is what here? Revenue from rendering of what? Services. Now listen carefully that here. What does it mean that here revenue from rendering of services? Because it might be happen that we are selling goods that here. But at the same time, it may be happen that we are providing what? Services. So when we are providing services, like when you're going to become a chartered accountant that year, you are going to provide your services that year now. Now, like the example, I'm doing teaching that day, I'm providing services that year, like the profession like a doctor, that they are providing what services that year. So how in case of a service we are going to recognize the revenue? Now listen carefully. In case of a revenue, it is divided into two categories. The first category, proportionate completion method. What is first category? That is proportionate completion method. So they say that here in first category now is the revenue from rendering of services. What is this? Proportionate completion method. And second is completed service contract method. Now understand the difference between both of them. In case of a proportionate completion method, basically we are providing services and that requires more than one act. This keyword that requires more than one act. For example, in case of a teaching, I take the, for example, C intermediate exam oriented batch and the regular batch that year. So when I take these batches for you, what is going to happen? It is not going to happen. I will come in one day I have to cover the entire syllabus. No, daily I have to come, I have to take one lecture. That it requires me more than one act that year. So I am providing services, but that require what here now? That require more than one act. So when it says that here that is going to require more than one act that year, what is going to happen? Proportionate completion method is going to be applicable here. So what does it mean? I will explain you that. Don't worry how to do the accounting of it. I will come to that here. Now, when it's come to the certain type of services where we have to a single act. For example, when the doctor starts a surgery, you cannot say that here I'm doing the open heart surgery today. Now, angioplasty is going on. They say that here now. Now they say I will do the 50% today, 50% I will do it tomorrow. No, they cannot say that. Then during the surgery that day, they have to do it now. Okay. So I will do in one shot that is. That is single act is going to be required. Okay. Now what is going to happen that here? Now listen carefully. So they say performance consists of execution of more than one act. That is the proportionate completion method. How to recognize the revenue? Proportional with degree of completion, like we have discussed about the percentage of work has been completed that in case of a construction contract. Here also that here, how much work has been completed. For example, the batch not related to cost here. For example, if the batch I'm going to take for CA inter regular batch here for the 3 months. If 2 months has been done, for on 1 month has been completed, I will recognize the revenue only for the 1 month, even though in advance you paid me the whole fees for the 3 months that year. Okay. So this example. A teacher conducting a 3 months course recognizes revenue after each month based on the classes completed. If I say that here, out of 3 months, one month has been done, I will recognize revenue for 1 month. What about the remaining 2? That will be recorded income received in advance that year. Then for the next month, I provided the classes, then I will again, that income received in advance will be cancelled and revenue will be recognized. Again, the same I will do for the 3rd month as well. They will not ask you the accounting entry. But I can say the accounting entry as well that day. When you give me, suppose for example, to make it easy, suppose you, just an example, suppose you gave me, let's say exam oriented by 6,000 you gave me. So first month I gave you, I provided services that is, so I receive the amount from you. So I will pass the entry. That is the cash bank account debited 6,002, income received in advance 600. I will not create to P&L account income. Why? Because I have not yet provided services that year. Now after 1 month, out of 3 months, only 1 month has been done. Okay. Now, what is going to suppose the EO batch is for the 2 months. So 1 month has been done. So out of 6, I will recognize 3 as the revenue. So income received in advance will be debited because I have credited earlier that year. Now that will be cancelled. I will recognize the revenue. So I am to pass entry income received in advance will be debited and revenue will be credited. Then I will come to second month. Then again I will provide the services. Then income received in advance will be debited and revenue will be credited. Okay, like that we have to pass the entry. So what is going to happen that it is a more than one act. So proportionally we are going to recognize the revenue. But what is going to happen that when it's come to completed services contract method, they say performance consists of execution of what here? Single act that here. So when they say performance consists of execution of single act means that we are providing services, but in one shot You have to provide a service like the doctor providing the surgery. So they say when the doctor meant to, when in such type of service, when we are going to recognize the revenue, they say recognize revenue when rendering of services under the contract is completed. Almost all work has been completed. They have done the surgery, now almost done that here. They can recognize the revenue. So for example, a doctor performing surgery recognize revenue only after the operation is what completed that year. Again, the same point is a common point in sale of goods, rendering of services, that is no significant uncertainty exists regarding the amount of consideration and the ultimate collection, that we are to recover the amount that year now, and we know the how much amount we are to recover that. Now, we are coming to third category that here, which AS9 also talks about that here, how to recognize the revenue for interest, royalty and dividend that here. Now, listen me carefully that they say recognize based on time and out, interest is on X, we are talking the income point of view, okay? So, recognize based on time and outstanding amount. That is nothing but, let me tell you that here, that is nothing but a accrual basis that here, okay, accrual basis. But they didn't use the word accrual here in case of interest. They said time and outstanding amount. Whatever the outstanding amount that you have, then you have given the loan to someone that you're receiving the interest on that here, okay? So they can call it accrual, but they didn't use the word accrual. So in essence, so don't use the word accrual in examination when the points come to the interest. Use the word the time and outstanding amount that here. So you are going to pass entry recognize base. Sorry, you are going to pass entry here that here. I'm going to say that here. If you receive the amount cash or bank account, otherwise receivable account will be debited and interest account will be credited. But time and outstanding amount, that is nothing but accrual basis. But the accrual basis, but they didn't use the word accrual, so you are also not going to use the word accrual in examination that here. But when it comes to royalty that here, royalty income you have, then they use the word accrual basis that here, okay? In accordance with the agreement terms. What does it mean? Let me tell you that here. Suppose when you become 100%, you are going to become a chartered accountant, no doubt about it that here, okay? So when you are going to become a chartered accountant, what is going to happen that here now? You started writing the books here. So when you started writing the books that year, you are so famous that you're now you're writing a book on financial advice, you're doing financial advice, or there's so many people in the market, they want to know about the finance that year. You're writing a book on that year, your book is so famous that year. So one of the publisher approach you and they tell you that year, they want to sell your books in the market, and then on every on every book they sell in the market, they will give you some amount that year. Suppose the price of your books, let's say I'm saying the 500 is the price of your book that year. So what is going to happen when your books is going to be sold in the market? What is going to happen? They say on one book they will give you 100 rupees. Suppose so out of 500 they will give 100 rupees that year. So what is, if one book is sold in the market, so you have the right to receive 100. That is accrual that year. In accordance with the agreement terms means that year, what is mentioned in the contract that year. So what is mentioned in the contract that on every book that year, suppose you are going to recover the 100. So that is the agreement term that year. Okay. So accrual means if they sold 1,000 books, so 1,000 multiplied by, in my example, 100, because on every book they will give 100 rupees that year, and they sold 1,000 books in the market that year, so they are going to pass. I mean to say you are going to record on the basis of accrual how much books you have sold in the market that year, and what is the agreement terms that year, what is the amount on each book that year. Okay, so interest, that they mentioned the word accrual income in terms of in case of a royalty, but they didn't use the word in accrual in case of interest. So you are going to use the word time and outstanding amount, but that is nothing but accrual on. Now I'm coming to the C point. They say dividend. Okay, what say in this? Just give me a minute that here. Okay. What they say that in the point number C that here now, recognize when owner's right to receive payment is what he established. What is owner's right to receive that here? Owner's right to receive means that here when the dividend is declared by the company. Once they're declared means the shareholder has the right to receive the dividend that year. So once they declare the dividend, then we can recognize the revenue in the books of account. Obviously, we have not received the amount till now. So you will call it receivable account will be debited and dividend will be credited. Once you receive, then cash and bank account will be debited and receivable will be credited like that. So interest on time and outstanding basis that here now, royalty and accrual basis that in accordance with the agreement terms, and the dividend when the right to receive payment is established, basically once they declare the dividend that here. Okay, so we discussed about these 3 points: sale from revenue from the sale of goods, revenue from the rendering of services, and interest, royalty and dividend. But there are certain more. Okay, let me discuss with you point number 8 and 9, and then we'll come to the point number 10, which is also very important. That what it says that in the point number 8, that effect of uncertainty on revenue recognition. What does it mean that here? Means when to recognize uncertainty when in terms of recognition of revenue one by one. First, they say when uncertainty arises after the sale of service. Once you provide the services or you sold the goods, so you recognize the revenue at the time of sale. Okay, it's a receivable, that is, you pass the entry, debtors account debited, sales account credit, that is. But later on, uncertainty arises that you may not recover the amount. So basically, it's a provision for doubtful debt. So you will make a provision that here. Uncertainty arises at the time. So we cannot recognize the revenue because one of the condition to recognize the revenue, that is certainty regarding the ultimate collection. If there is no certainty regarding the ultimate collection, that here, what we'll do that here, we are going to postpone the recognition. You cannot recognize the revenue that here, even though you have sold the goods that here, if the time of sale, you are not certain that there will be ultimate collection that year. Okay, let me give an example that here. I became chartered accountant in 2011. Okay, so 14 years. Okay, so 15 years that year, I became chartered accountant in 2011. Okay, now after my marriage that year, I know that every year I file income tax return of my wife. Okay, so when I say I file income tax return of my wife, whether she is going to pay me? No. Oh, okay, and even I cannot tell her to give me the amount of that I have filed your income tax return that year. Okay, because ultimately I have to come back at home. So how can I say that to her that to pay me for the return that I filed for you? So what is going to happen that year? I know that here there is no certainty here that I am to recover the ultimate. There is no ultimate. I never recognize revenue that are receivable for providing the services. You got the point here? So there should be a certainty that we are going to recover the amount, then only we can recognize, otherwise we cannot. This is postpone means here, if certainty arises later on, then you can recognize the revenue in the books of account later on. But if certainty arises that year. Now the third, if consideration is not determinable within a reasonable limit. What does it mean that here? If it rarely it will happen. Not determinable means what are the two conditions to recognize the revenue? That there is no uncertainty regarding the amount. It means we know the amount. If we don't know the amount, how can we recognize the revenue? This is what they are saying. If consideration is not determinable, and which is rarely is going to happen. I'm going to say that we know that how much is the amount when you sell something that year. So we know how much is the amount. But rarely, suppose if we don't know the amount that year, so in that case, we cannot recognize the revenue. When we'll come to know about the amount, how much is the amount, then only we can recognize the revenue in the books of account. Okay. So that's why we'll postpone it. When it will come, then we'll recognize that. In case of a discount, you know that there are two types of discount, cash discount and trade discount. So what happens in case of a trade discount? They will deduct from the revenue. For example, we sold a goods at 100. At the time of sale, we give a discount of 10. So we will recognize at 90 only. Okay. This is the cash discount. The cash discount basically will give them later on. Cash discount we offer to the customer to give the payment later on early. For example, I'm giving you a cash discount. Today I'm selling them credit sale. But I tell you, if you give me the payment within 15 days, if you give me the payment within 15 days that year, I will give you a certain discount. This is a cash discount that is okay. So cash discount we call as an expenses in P&L account. Okay. Now there are last point is the special cases. Some special cases related to goods, and there are some special cases which are related to what? Services. That one more thing, a concept, sale and repurchase. I will discuss with you. Okay, these 3 points. Now listen carefully that here. Now special cases which are related to goods. What it says that here? They say delivery is delayed with buyer. Is it possible? Or we also call them bill and wholesale. We also call. It means I'm ready to deliver the goods, but there is a delay in the delivery of goods on buyer's request. So buyer is requesting to delay the delivery. Can I recognize this revenue? Yes, but the provided 4 conditions should be satisfied. This revenue is recognized immediately if the following conditions are satisfied. Even the goods not yet delivered, it is delaying in the delivery of the goods on the buyer's request. What are the 4 conditions? Goods are specifically what? Identified. And it cannot be given to any other customer. Okay. So goods are identified. These goods belong to this particular customer. Delivery is delayed at who requested to delay the delivery? At the buyer's request. Now goods are ready for delivery. They are ready for delivery. Anytime when buyer will tell, for example, the flood happened in some buyers. So they say don't deliver it now, give it after 1 month. Or some renovation is going on there. So they say deliver after 15 days. So I will recognize revenue today only because goods are identified that year, and you requested me to delay that year, and I am ready to deliver it anytime when you tell me, and the title has been transferred to the customer. If these 4 conditions are satisfied, we are going to recognize, we are going to record as a revenue even though goods is not yet delivered to the customer. Okay. Now second is that here sales on approval. Okay. What is sales on approval that year? Maybe you heard, if you're from the foundation, you may know about what is sales on approval that year. I don't think so that sales on approval, I think not in foundation yet. Okay, anyways, that year. Sales on approval basically means that here now is when you sales on approval basically means that here I'm selling something that here. Okay, but certain customer they say no, I don't want to take it and all that. I say listen, one thing, for example, this calculator. I tell you, listen, take this calculator. You say no, sir, I don't want to purchase this calculator. I say no problem that here. Take this calculator. Don't purchase it today. I'm selling. Okay, I say if you like it, take it. Otherwise, give it back to me. So I'm giving approval. I'm going to recognize this revenue only when it's going to approve by you. Okay, we call them sales on approval. So when I'm to recognize sales on approval basis, if I done the sales on approval basis, when I'm to recognize in my books of account, so revenue is recognized only when goods are formally accepted by what? Buyer. It means I sold to you certain goods. You give me a call, yes sir, I like this product, I want to purchase it. Then it is a sale because you have given the approval to me. Or buyer has done any act of adopting, you are behaving like that, it's your goods only that day. Okay, so you are using it that year. Okay, now you're behaving like it's your goods, so I will consider you have purchased the goods. Now I have given you suppose example, okay, not mentioned in accounting, so example. I have given you 15 days. If 15 days cross, if you didn't inform me, then I will consider add that a sales. So for they say allow time pass of rejection is expired, and where no time is given, reasonable time is what is expired. Reasonable time is what here expired that here. Okay. Now I am coming to that here now. If any of these happen that here, reasonable time means that any 15 days, 1 month generally consider reasonable time. If that reasonable time period is expired, I will consider it as a sales that here. When anything happens earlier, it will be considered as what? Sales that here. Now here, they say goods sold subject to what? Inspection or what? Installation that here. So certain time it happened that here, we need what we call them here, certain inspection is required or installation is required. So it divided into two categories. That installation might be complex like in case of air condition, or installation might be simple like in case of what? Refrigerator. Okay. So what happened that here, dear? Revenue is recognized when installation is completed. So when I'm recognizing the revenue, when installation is complex, that like in case of AC, that air condition. So I say when the installation is done, then I say yes, it is sales now. Or even the installation not yet, but goods are accepted by the customer. You agree that here, okay. Even the installation not yet done, but you accepted that here. Okay. So in that case also I will call it as a sales that here. Okay. But if the installation is simple that here, so installation is not a criteria. So when you purchase the good, it will be recorded sales in my book. So because actual installation is not necessary because installation is simple that here. So if installation is complex, what is going to happen that here now? Once installation is completed or goods are accepted by the customer, whichever happens earlier. If it is simple, once you purchase the good, I will record it as what? Sales, like in the case of refrigerator. Consignment sales that here now. In case of a consignment, basically we consigners send the goods to consignee and consignee sell to the customer that year. So when the consigners send goods to consignee, it is not recorded as sales because consignee is playing the role of mediator here. They are playing the role of what? Mediator here that year. Okay. Only when the consignee is going to sell to the third party, then only it will be recorded as sales. This is what they are saying. So revenue recognized only when the goods are sold to a third party by consignee. So when consignee is sold the goods to the third party, then only it will be recorded as what? Revenue. Now the last one, goods are sold to distributor other for resale. Now understand, if we have transferred the ownership to the distributor, it will be considered sales. Now if you have not transferred the ownership, the distributor is also playing the role of mediator, like in case of consignee. The same treatment. When the distributor will sell the goods to the third party, then only it will be recorded as a sales that is. So they say one significant ownership risk passed, then it will be considered sales. However, if buyer act as an agent, like in the case of consignee, treating the sale as same as what? The consignment sale means when they will sell to the third party, then not only it will be recorded as sales that year. Okay. Now this is a special cases that year. Okay. Now here, in case of a services that year, membership fees or subscription for publishing, you subscribe to certain magazines and that. So what revenue from the publisher point of view? So they, for example, the publication is for the 3 years. You subscribe for 3 years. So on SLM basis, you recognize the revenue for 3 years that year now. Or sale value of the delivered goods. What it might be happen. Either, for example, you paid 3,000 for 3 years for some magazine. So that service provider is going to recognize the revenue in 3 years SLM basis, 1,000 for each year. But suppose in the first 50% magazine delivered and the remaining will be delivered in the next 2 years. So 50% if delivered in the first year only that year. The sales value of the delivered item in proportion to total sale value. Total sale value is 3,000. They delivered in the first year only 2,000 example that year. 50% let's say 1,500 that year. So they will recognize the revenue 1,500 in the first year only that year, in the proportion of the services that they have provided. Advertisement or media commission. Remember that when the advertisement is going to appear in public, then only we recognize as revenue because then only they have delivered the services. Insurance agency commission, when the insurance policy is going to start or renewal date, when the effective commencement or that renewal date of the related policy comes, then only they will recognize the insurance commission. Installation fees if they are charging once the installation has been done and which is accepted by the customer, then only it will be considered as what? Installation fees will be recorded as what? The revenue. Now, the last part that here, that is sales and repurchase arrangement. What is this sales and repurchase arrangement that here now? For example, Mr. A, say A sold goods to B that here. Okay, A sold goods to B at what price? 10,000. Okay. Now what happened that here now? Then B, then again the same goods they repurchase from B at 12,000. Now what does it mean? Let's take an example. Suppose this calculator I want to sell you that here. Okay. I know the value of this calculator is not 10,000. Just an example. I sold you at 10,000. So I recovered the amount. I pass the entry cash account to sales account. But I need this calculator. So I repurchase this calculator from you by paying you 12,000. I will pay you later on. But I repurchase from it 12,000. So this IS 9 says this is not a normal transaction of sale. This is a sales and repurchase arrangement. It's like a loan that here. So when I gave you the, when I sold you that here, it will not be recorded sale. It will be recorded loan taken. So I am going to pass entry here. Bank account will be debited by 10,000. Bank account will be debited by 10,000 that here now. And loan account will be credited by how much here? 10,000. This is first point that here. Okay. Now what happened that here now? At what price I am repurchasing from you? 12,000. The additional amount I am to pay you 2,000. That 2,000 will be considered as what? Interest. So they say interest account will be debited by 2,000 that here. And I am liable to pay you that is the loan account will be credited by 2,000 again. So first when I sold goods, it will be recorded as loan. So loan account credited by 10,000, then again it is credited by how much here? 2,000 that is. Now these 2,000 is going to transfer to profit and loss account. So this P&L account will be debited that here now, and loan interest account will be credited that. Interest will be transferred to P&L account. Now what amount is appearing in my loan account? 10 plus 2 that here. Then I will repurchase the goods from you. And then I will pay you in future. It will be considered repayment of loan that here. So loan account will be debited by 12 and it will be credited. Bank account will be credited by 2. You got the point that here now? So when why? Because I'm doing the arrangement of what here? The loan that here. I'm doing the arrangement of loan. So we are calling it sales, but I'm selling you something and repurchasing from it a higher value because I need a fund. So when I sold you a quality sale, basically I need a fund. That's why I recorded sales in my books of account. And again, I repurchase from you. They say don't do that. The AS9 say that it will be recorded as loan taken in the repayment of loan that year. So how much I loan took from you? 10,000. How much I'm repaying you? 12,000. The 2,000 will represent what? Interest. So now the last point that here now, which is what? Disclosure that here. This in addition to what is mentioned accounting statement related to disclosure of accounting policy. We have to recognize that we have to mention them why the recognition has been postponed. The recognition may be postponed due to what? Due to recognition may be postponed due to we don't know the amount, or there is a uncertainty regarding the ultimate collection. This is all about accounting standard 9. So before we move to the question, what we'll do that we'll quickly do the revision of all these points that here. The point number 1 for the introduction, I already told you that it is mentioned that when and how to recognize the revenue. What do you mean by revenue? Revenue is the gross inflow of cash, receivable or the consideration in the ordinary course of business from the sale of good, rendering of services, or from the interest, royalty or dividend that here. Agency relationship, that agency is going to record only the commission part in their books of account as revenue. Item which is not covered under the accounting standard 9 that is, which is covered under the AS 12, or that we discuss about the foreign exchange fluctuation that here, higher purchase AS 19. Now, what is the revenue from the sale of good? If the transfer of property in goods that here for a price or risk and reward has been transferred, but there should not be uncertainty. There should not be any uncertainty regarding the amount and the ultimate collection. When it's come to rendering of services, two types of services that here now, completed service and proportionate service. In case of a proportionate services, what is going to happen that here now? We are going to record as the proportionate services that here now when it's okay more than one act. So in the proportion of services has been provided, same amount of revenue should be recognized. In same proportion, revenue will be recognized. But in case of a completed services contract method, it's a single act like the doctor. Once the substantially all activity has been done, then only going to recognize the revenue. Income from other sources like the interest, when the on the basis of time in the outstanding of royalty on the accrual basis in accordance with the agreement terms, and dividend when the right to receive has been established. If the uncertainty that is what is going to happen in case of uncertainty that here now. So if uncertainty is after selling, we'll make a provision. If uncertainty regarding the ultimate collection, postpone when certainty comes, then recognize amount in relative amount also. Uncertainty regarding the amount, we don't recognize it. When certainty comes, then recognize only. Discount, trade discount, reduce from the sale value, and the cash discount will record as an expense P&L account. Special cases, good delivery at the buyer request. Four condition that here. What are the four conditions that it is delayed at the buyer's request? Goods are ready, it's our identity, we cannot deliver to someone, and the title has been transferred. Sales on approval, this is once it is approved by the customer or reasonable time has expired, he is acting like he has purchased the good, or that here now time whatever decided that has passed, then it will be considered as what? Sales. The goods sold subject to inspection or installation. If installation is complex, once installation has been done or accepted by the customer, and if it is simple, once goods are purchased by the customer. Consignment sale, when it is goods sold by the consignee to third party, then automatically it will be recorded as sales in the books of consignor. The goods are sold to distributor, same risk transfer, it will be recorded as sales immediately. Otherwise, when the goods sold by the distributor to the customer, then it will be recorded as sales only. Services, membership, that is a fee or subscription or publication on SLM basis, or the sale value of goods which is delivered to them, services provided to them in the same, for example, subscription for 3 years, but we have delivered for 3,000, but we have delivered the maximum of 2,000, so 2,000 will be recognized, otherwise on SLM basis. That year. Advertisement, when the advertisement will appear before the public, and the insurance, when the renewal date comes, effective date of the insurance policy. Installation, when installation has been done, accepted by the customer. Sales and repurchase, first it will be recorded as a loan taken, and when they will repurchase and will pay the amount, it will be recorded as repayment of loan. Difference will be recorded as what? Interest. Disclosure, whatever disclosure has mentioned AS1 regarding disclosure of accounting policy. In addition to that, we also have to disclose why the amount has been not recognized in the books of account, why it is postponed. Okay, so this is all about accounting standard 9. Now what we'll do that quickly, we'll cover the question on that here. Now given the question number 25, that here, given the following information of Rainbow Limited, what it says that here now, here on 15th of November, the goods were worth rupees 5 lakh were sold on approval basis. It means sales on approval basis case. The period of approval up to 4 months, it means we sold goods on 15th of November. Listen carefully, 15th of November. Now 4 months is going to come 15th of December, 15th of January, 15th of February, 15th of March. So on 15th of March, 4 months will be completed that here. They say that here now 4 months after which they were considered sold. The buyer sent approval of for 75% goods sold up to 31st of January. So here up to 31st of January, the buyer give the approval of 75% that year. This 75% is will be considered as sales that year. What about the 25%? But this is now that no approval or disapproval received for the remaining goods till 31st March. So till 31st of March, buyer did not approve anything, did not inform us anything. The remaining 25% will also be considered as sales here. The reason is that here now, because the 4 months has expired, reasonable period that we have decided earlier has been expired. So after 4 months, even the approval is not given for 25%, that will also be considered as what? Sales. Simple. So simple. You are going to score 60 plus in advanced accounting 100%. Okay. Now listen me carefully. So complete amount rupees 5 lakh will be considered as what? Sales. You can write it down. How much will the amount of sales? Here is the 5 lakh. Sales. Oh, what happened? The complete amount rupees that 5 lakh will be recorded as what? Sales. Now I'm coming to the next point. Okay, the first point. I'm coming to next point now. What it says that in point number 2, on 31st of March, goods worth rupees 2,40,000 were sold to Bright Limited, but due to refurnishing of their showroom being underway on their request, goods were delivered on 10th of April. So 30th year comes to end on 31st of March that year. So here on 31st of March, can I record as a sales? The answer is yes, because it is a case of goods delivery delayed as a buyer's request that year. So I'm going to record as revenue, but the goods is of the customer only. It is with me, but that does not belongs to me. Okay, these goods belongs to customer only, but goods we are delaying the delivery of the goods on the buyer's request that is. Okay, these 2,40,000 will be recorded as what? Sales. Now Rainbow Limited supply goods worth rupees 6 lakh to Shyam and concurrently agrees to repurchase. It will not be recorded as sales. It will be recorded as okay. This financing arrangement, that it will be recorded as loan. If you take a repurchase higher value, difference will be recorded as what? Interest. Now, the Due Limited use certain assets of the Rainbow Limited. Rainbow Limited received rupees 7.5 lakhs and rupees 12 lakhs interest. So interest on time and outstanding amount, and this royalty will be recorded as what? On accrual basis. So simple. From Due Limited. On 25th of December, goods of rupees 4 lakh were sent on consignment basis, of which 40% of goods were unsold. At the end of the 31st month, so they have not consignment unsold at the end of the year. So if it is unsold, means that here it is not yet transferred by the consignee to the customer. So that only 60% will be recorded as sales. So 4 lakh multiplied by 60%, that is going to come how much here? It will come here 2,40,000. Correct calculation? 2,40,000. Okay, done. Simple. Okay, now next question. Raj Limited entered into agreement with Hina Limited to dispatch goods valuing rupees how much? 5 lakh every month for the next 6 months. The goods is of rupees 5 lakh, and they say for next 6 months or for the entire payment. Hina Limited accordingly made the entire payment of 30 lakh. So we decided I am to deliver you every month 5 lakh goods of rupees 5 lakh each every month, and the total 6 months you already gave me 30 lakhs. Okay, but I dispatch you the goods in the 4th month, but that due to fire in the premises of your company, Hina Limited, you requested to me not to dispatch the goods of the remaining 50 lakh. It means each month it was 5 lakhs. So for first month 5, second month 5, third month 5. So I dispatch the goods for these 3 months 5 lakh. What is going to happen that year after that year? Now, for the remaining 3 months, what is going to happen that you requested me not to deliver that year. So they say Raj in the account in 15 lakhs and the balance transfer the balance advance, not advance that year. You requested me to delay the delivery of the goods that year. Okay, so it will not be recorded as advance. It will be recorded as sales only because the delivery of the goods is delay on the request of the buyer. Okay, so it will be recorded sales complete 30 lakhs. How much is the sales here? Complete 30 lakhs. Okay, so now we are done with accounting standard 9, that is for today, and tomorrow we are going to cover accounting standard 12. There are so many students who is commenting and saying this, sir, when you will start a consolidation, amalgamation, don't worry, soon, in few days only, I'm going to say that a complete marathon for separately for amalgamation, then a consolidation that year, financially for each and every chapter to come soon. Don't worry for that here now. So tomorrow we'll cover the accounting standard 12, that is 10, sorry, property, plant and equipment, and today we've done with the accounting standard 9, and believe me, you are going to score 60 plus in accounts that year, and I know that you have so much of potential that year now, but as the examination is coming that year, you just have to focus on your studies that year and don't divert here and there, and just concentrate on your studies that year. Okay, certain time it might be happen that self-doubt is the most dangerous thing what I believe that year, because certain time once you don't clear the examination first attempt, second attempt, then doubts come, and then you start self-doubt yourself that whether you're able to do it or not that year. But let me tell you honestly that you are capable to crack this beautiful examination, chartered accountancy. But what it requires that here now, you just have to do the consistency that year, and one day if time permits, I will tell you my story that year. Okay, till the 10th standard I was not a shy student at all. I was very worse at it till the 10th standard. Then after that I worked so hard, and okay, in 12th I scored very good marks that year. Okay, then I in graduation, then I've done the CA, and then during then no problem. But what happened till the 10th, I was not a good student at all that year. So I believe that here, honestly, if I can become a chartered accountant, each and everyone can become a chartered accountant. It is not at all a difficult task that year. And confidence, it is going to take time with that the confidence comes gradually in the life. Confidence comes. I am from a very small town that year. Okay, so I did my schooling from a very small school that year. Okay, but over a period of time that year, confidence automatically come that year. One day, if the time permit, today I take a session at so many places that year, not only just in India, outside the India also travel that year. I take these at advanced level, we call them international financial reporting standard that year. I take session on international financial reporting standard implementation, how to implement that year. I take a session, not I mean to say at the corporate level to the CEO that day, the top executive of the big brands that day. Recently I took a session for the Louis Vuitton group that year. Okay, very famous brand. Okay, these are luxury brands that in Dubai that I have taken a session for the top management that day, how to implement the IFRS that year. So what I'm not saying to tell you that I'm taking this session and that session, I'm telling you to motivate you that here. It will take time that day, but you are going to do, confidence will come later on, everything will come in life, but it takes time that day. Okay, you just have to have trust on yourself that here. I'm telling you that here. Might be you don't believe that here, that you are capable to do that. But I'm 200% sure, even though I have never met you that here. Okay, but I'm talking to you. Yes, I'm talking to you. I know that here. You have a potential that year, you can do miracle in life that year. So don't underestimate yourself. Just keep quiet, just focus on your studies that year. No need to people to show off to the people that I have done this, I have done that. No. You just have to concentrate on your studies. The day result will. I believe that don't even tell to people that you're doing the chartered accountancy that. No need to tell to the people. Even just your relatives and your parents know that. No need to tell to the people that I'm doing this. And if they ask what are you doing this, I'm doing BCom. What are you doing? If you're done the graduation, I'm doing something simple. MCom, I'm doing that here. Some post-graduation. Tell them. Don't tell them you're doing the chartered accountancy that year. The day you're going to crack this examination, they will come to know. Don't worry for that. Okay, so you have so much of potential. Believe in yourself. You are going to do a miracle in your life. Okay, so that is for today. Take care, all of you. Bye bye. And if you want to say me anything, you can drop me a message in the comment section. I love to give you a reply there. That is for today. Take care, all of you. Bye bye.